Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of February 5th, 2024. We're going to touch on where we are in the S&P 500 year to date, the different sectors and how they performed last week. We'll talk about the economic calendar last week and what we've got coming ahead this week, and then we will jump into the trades on the option trading platform. I think it's super important that we understand all the strategies that the rich are using to get richer, and then we can use those same tools and strategies to profit for ourselves in any market. Be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks alone outright. Also, please do me a favor. If you appreciate the work and effort that goes into making these videos, if you can hit that like and subscribe button, it really helps to get the video out to more people, and I really appreciate it. So thank you very much. All right, guys, we started in the SPX, the S&P 500, last week at 48.90, and then we ended up over at 49.58. So we were flat to slightly up last week. We are up year to date. If we go to the year to date chart, adjust it a little, we are up around 3% year to date. We started the year at 47.43. So the PEs, the price to earnings right now, the S&P 500 is 20, and the 10-year average is about 17.6. If we look at the economic calendar from last week, we can see that we had interest rate decision on Wednesday with the Fed, and as expected, no change. He talked about higher for longer, so there was a little bit of a drop in the market on Wednesday. And then the job numbers came out on Friday, and they were very good. 353,000 versus 185,000 expected, so that really propped up the market. And next week, or this coming week, starting the 5th, on Wednesday, we've got the consumer credit. It's not too big of a week for us, but Wednesday, we've got some consumer credit reports. 15 billion is expected, and then jobless claims on Thursday. Interest rates, the Fed talked about higher for longer, so right now the market's pricing in a May interest rate cut, but it's only at 59%, so it may go out longer than that. I think June, 50%. And then July 50%, or even another cut down to 4.5 and 4.75. So it's really the second half of the year that we're looking at possible interest rate cuts. If we go to the FactSet Earnings Insight Report, we have 1.6% year-over-year earnings growth for Q4, and again the valuations are at 20. If we go, let's look at page 19. Q1, we've got earnings growth at 4.5%, revenue growth at 3.6%, and for the full calendar year, we're looking at 11.2% earnings growth and 5.4% revenue growth. So that 11.2% is down from 11.6% projected last week. And then if we move down to the price to earnings for the different sectors, we've still got energy at a good value, utilities, and even real estate. Moving on to the different sectors, last week everything was up except energy was down slightly, as well as real estate. Year to date, pretty similar. Utilities are down, real estate's down, materials, energy, communication services, healthcare, and tech are the big winners so far this year. So let's jump right into the trades on the platform. And the first one that we have is oil, crude oil. I did put on, when it gets down to that 70 range, I like to be long oil, and we're down at that, back down at that range right now. So I threw on a couple of put credit spreads to make, a little over $100, 182 on this one and 128 on this one, 11 days. So I didn't ask for, I'm not making quite as much, and then the 41 days out. But I think at 70, oil seems to be trading between that $70 and $90 per barrel range. Okay, and then Apple, we threw on a trade in Apple last week, a put spread, and this was a after earnings trade. I actually did a video on this one, so you can check that out from last week. But my target price for Apple is 200. It's been down. Target price is up here, so I wanted to put on an earnings trade, but wanted to do it after earnings because I thought there might be a drop, and there was, and now we're up $61 already. We've got 109 left to collect in Apple, so that worked out well so far. And we'll just stay long, we'll put credit spreads in until we get up to that 200 range, and roll out every month. Adobe, same situation, put credit spread in Adobe. We've been playing this for a while. It's at 634 and IVR is 12. We've got 755, or we have, actually it's not showing the extrinsic because the market's closed right now correctly, but we've got quite a bit of extrinsic value in Adobe right now. Actually, no, we've got 166 minus 51. Looks like this is correct. Only 115. IVR is low, but I may put another one on in March because my target for Adobe is much higher at 680. AMD's done well for us. Just over the last 60 days, $366, 180, so 6 months, $943. Basically just doing iron condors, and then right now we've got to put credit spread on because it did close down. So I am long AMD. I've got a 195 target in AMD. It has moved up a little bit lately and is doing well, but again, we've still got room to move. Amazon is another after earnings trade that did a video on last week, and actually it would have been better to put that one on slightly before, but even putting it on after, we can't second guess ourselves. We're still at $30 from last week. It went up after earnings as well. We're in good position. I just did a $5 wide put credit spread, looking to collect about a third the width of the strike. And as long as we stay above that 165 short strike price, we're in good shape. The app Amazon, we've done okay. Yeah, we haven't traded a lot, only $150 over the last year, but it's at that range now where it's low and I've got a higher target. I'm long until up at that that $200 range. Chewy is another one we've got a short put on. I had a call but closed that out because it has moved down. Chewy seems to trade between that range. I like it long term, all the way up to 30, but it's been trading in that range between 17 and 25. So as long as we needed to move up a little to continue to make money in Chewy. Costco has gone straight up, so it's at 709 right now, up from 686 last week. We've got 2 call credit spreads on. We've moved them out to March, and we're actually challenging those now. So I needed to stay below this range, and you can see we're way up there. We broke above the resistance level, and now that's going to be support. We'll see where it goes from here, but it is up huge right now. So I've got to be long, short some stocks so that we make money when the market goes down. So I do like Costco, but the long-term target on Costco, we're already above it at 709. So my target's like 675, 680. So I'm going to stay short Costco. DraftKings, we have done very well in over the last year. Let's look at what we've done. 24.57. Just trading leaps options with calls written against them. It's been kind of a cash cow. It trades between that 32 and 41 range, and we're up right now at the call range, but we're in March and we've had a lot of moves up. So I'm going to go ahead and keep those calls on. I'm not going to close those out at this point. I think there's a chance it can drop back down. Stocks don't just go straight up, they come down as well. Google, did a video on that last week as well. Earnings trade, check that one out. But we've made, I think, for the last 180 days, we've done pretty well, a couple $100. But right now we've got put credit spread on. I've actually got a placeholder here. I want to put another one on next week because it did take a drop after earnings. And my target's like 180 to 200. So maybe 190 range. And we're at 142. So I'm looking to add put credit spreads to Google next week. IVR is still decent at 20. Intuitive Surgical, this is not real liquid. It was an earnings trade that we had on. We're doing okay. We're up $112. We've got, oh, wow, it doesn't look like we've got a lot of extrinsic left. Well, I think we have more than 23. I don't think that's right. Oh, it's because of the, it's not real liquid. So what I mean by that, we're still in between the range, but if you go to the table mode and you look, and the difference between the bid and the ask, see 285 and 310, so 15, you've got 25-cent wide spreads right there, 20 cents here. So that's money that you give up. So I don't like to normally trade Intuitive Surgical because it's not super liquid. If it stays between that range, rather than give it up, I'll just let it expire worthless. IWM, the Russell, we've got two $3 wide put spreads on, and we were just looking to collect about $100 on each one, so a third the width of the strikes. And the stock price is at 194. We're at short strikes of 190 and 196. So it did drop last week, so I actually put on another tranche, but we're profitable down to 194, just about where we are right now. So we just need the Russell to move up, and the Russell's been down compared to the NASDAQ and the S&P. L3 Harris has done pretty well for us, continues to do well. Put another one of those on. We've made $700 over the last 180 days. We've got short strike at 210. It did drop a little bit last week to 206. But I did roll to, we're in March right now, so we just needed to move up a little. Good defense stock. And we know there's conflict going on right now, so the defense stock should continue to do well. Lululemon, I was looking to just close out this call side for a couple bucks, but it's not super liquid either. I think I did an earnings trade on this one. It's actually worked out pretty good for us. Just in the last, 60 days, we've made $792. So it's been doing well. We're right between the, we're still above our short put strike. So we're in a good range right here. And Lulu's done well. Microsoft had earnings last week. They did well. We've got a $10 wide put spread on. We've already made 190, another 225 to collect, and we are pretty good ways above our short 400 put strike. So Microsoft is looking good. You can see where the IV rank dropped quite a bit, and we can look. We're profitable anywhere above that 400 strike. Netflix, we've done really well over the last year in Netflix, I think. Yeah, over $3,000 made just doing iron condors and Netflix. Still have got a February on and then a March as well. Same strikes, 430, 620 short strikes. We're still right in the middle of that range. $405 left to collect in an extrinsic. ServiceNow. This company had earnings and did really well. Cloud-based company. And my target is $800. Yahoo Finance has $843. We've stayed between that range. We're at 97 profit. We've got 408 left to go. Only 13 days, so I'm hoping it just continues to stay in that range. Palantir has earnings next week, I believe, and we've got leaps options and then calls against them. It is down. It's been trading between that 16 to 19 range, but great company. Over the last 6 months, we've made $531. I'm just going to continue staying long with leaps and then selling calls against them and making money on both sides with poor man's covered calls. And it's trading between that 16 and 19 range. So we'll see how earnings come out this week, but I suspect that they should do well. SoFi has been up and down. We are up. I love this stock. I've done videos on it. It seems to trade between that 7 and 10 range. We're up for the year $600, but it's gone up and down. So I'm definitely long SoFi. Any moves down next week, I'll add more leaps options. SQQ is just a hedge against the NASDAQ. Ultra short Qs. Verizon, we just own the shares outright because there's a 6% dividend, and I write calls against it, and we've done really well. We're up $898 on the stock alone in Verizon. Any drop, I'll probably accumulate more. Wells Fargo, we've got 2 leaps. We've got 1 call against it at 50. It's continuing to do pretty well as well for us. And then the last one that we have on is ExxonMobil. And anywhere above 100. We're at almost 102 right now. And it's continued to produce pretty well for us as well. Any drop below 100, I will continue to put on put spreads. And if we look at earnings next week, guys, we've got a few that are coming out. If we go over here, put in earnings, all earnings, then we can sort by the date. Let's see, we've got Caterpillar. I know that we've got Palantir here. We've got Spotify coming up next week. Chipotle. Here's Spotify on the 6th before the bell. We've got Chipotle, CMG, the 6th after the bell. Uber. I like to look at the big ones and see at the time if it's worth placing an earnings trade and kind of evaluate the whole stock. So that's what I'll do before the earnings for all these stocks next week. But we've got Disney, Wynn, PayPal, ConocoPhillips, and Pepsi next week. So those are the earnings trades that we have. All right, guys, I put a link down below for that free options workshop. Be sure and grab that. Remember to hit like and subscribe. Let's get the video out to as many people as possible. Leave a comment. Let me know what you're trading. Any questions that you have, I answer every one. Thanks for watching. I'll see you in the next one.